What's going on, everybody? In this video, we're going to be talking about the different volume profile shapes and the typical trades you can look for with those volume profile shapes. The first shape we're going to cover is the D-shape standard balanced profile. I'm going to use the Substack write-up that we had a few months back that is very extensive. We're going to be using a lot of the examples that we talked about in this post for this video. So if you guys would like to follow along, I will have the link in the description below. I'm not going to be covering everything that we talk about in this article, but I will be using the picture examples as examples for this video. So basically, for a D-shape volume profile, it is basically signifying that the market is in balance. And balance is when the market is in a complete agreement that price is fair. There is no imbalance towards the high, which would typically look like a P-shaped profile, or an imbalance towards the low, which would look like a lowercase b-shaped profile. With a D-shaped bell curve profile, as seen in this example here, the POC is towards the middle, and the volume begins to fall off towards the high, and the volume falls off towards the low as well. Typically, this shape of a profile is seen during a ranging market. That could be either a accumulation or a distribution style of market. It's typically found when the volume is not really picking a side. The volume is not heavily trading towards the high. It's not heavily trading towards the low. They're just kind of agreeing on a standard price and kind of ranging around that level. So with the D-shaped profile, how do we trade profiles like this? Typically, what we want to look for is we want to look for when the wicks are starting to extend outside of the value area. So the value area would be the value area high right up here. The value area low would be the low right down here. If you guys don't know what these mean, either read the article or take a look at my volume profile series on YouTube, where I extensively cover how to trade volume profile. But for this video, we're just going to be covering the specifics on the trade examples. So the value area here is the blue line. You can see the blue line is the developing value area high. That is how the value area high was shifting throughout the day. The blue line on the bottom is the value area low. That is how the value area low was shifting throughout the day. So typical trades you can look for on a D-shaped profile is when price is kind of wicking that value area high or value area low, kind of seen in this wick right here, this wick right here, and a couple of wicks over here as well. Or you could also look for when there are bottom reversal patterns or top reversal patterns on the candlesticks. So in this case here, we had a reversal doji right outside that value area low. Now, the basics for what you want to look for on a D-shaped profile are mean reversion trades. We can see based on the profile here on the bell curve that the volume is falling off towards the high and it's falling off towards the low, which indicates that they are not really finding any value on those higher prices. They are also not finding any value on the lower prices. They are finding value towards the middle of the day. So with that, we know that if price is beginning to push into those highs, there most likely is not a lot of value up there, and they actually want to reverse that back to the POC, back towards where that value is very strong. Same thing for the lows. If price is pushing down below the value area low, but they are not building up significant volume outside of that value area, then it most likely wants to look for that mean reversion trade back to the POC. That is what we refer to as rotations. That is when price is moving from one side of the value area to the other side of the value area. That is what's known as a rotation. So if you ever hear me say that on stream, I'm just referring to price moving from one side of the value area to the other. You can have a downward rotation going from the value area high to the value area low, or an upward rotation from the value area low to the value area high. Okay. So as we can see in this example here, the teal lines, those are the developing value area lines. That's how the value area was developing throughout the day. You can see it started out pretty small, then it started to expand as price kind of moved around, and then we stayed in a pretty flat range for the rest of the day. At the end of the day, you can see the bell curve, the D-shaped profile. POC is towards the middle. It's slightly towards the low on this one. Volume is falling off towards the high. Volume is falling off towards the low. And we don't see any major nodes towards the high of day or low of day. So in this example here, I've marked out with the arrows kind of where you could have seen these rotation trades coming in. So right here, we kind of bounced up into the value area high, rotated downward. Same thing here. You could have bought that level there or bought this level here, rotated upward, and then rinse and repeat. So with this example down here, this is one of those trades where you need to be careful. You don't want to just blindly put your orders on the value area high or value area low. You want to wait for that confirmation. You want to wait for that sell pressure. Now that can come in many different ways, as we talk about in our order flow series. That could be like a 1-minute market structure chart. That could be time and sales. You could be reading the delta. You could be looking at candlestick patterns. Whatever is best for you to find that buy and sell pressure, that is what you want to use. Okay, so in this example here, we can see that as we are pushing down into that value area low, there wasn't really a lot of buy pressure down there until this candle right here, when we started to see kind of a reversal bar. Now, when you're trading these D-shaped rotations, you really want to wait for that value area high or low level to have a reaction, right? So like in this case here, the bears were pushing through. We did not see a bullish reaction until we start to come back on the other side. So then we have a bullish reaction on that reclaim on that second green candle there. So that's kind of where you want to start to look to be a buyer and look for that rotation back into the POC, possibly the value area high, to complete the full rotation. Okay, and stop losses on these trades are very standard. If it's failing the value area high or value area low exactly, you just want to give it a little bit of room and place your stop outside of that value area. Now, typically how I manage it is, let's say if I buy this on the value area low here and I'm looking for that full rotation back to the value area high, let's say that's a 10-point rotation. Typically with rotation trades, you want at least a 1.25 to a 1.5 risk to reward. So if you are looking for 10 points, then at the absolute most, you might want to have your stop at maybe 7 to 8 points. And even then, that's probably a little high. You could probably put your stop at maybe 5 points and look for a 2 to 1 trade on that rotation. Okay, so if you really think that the full rotation is going to be hard to get, let's say that full rotation is 10 points, you might be able to give it a 1-to-1 trade. So risking 10 to make 10. Most cases, you do not want to do that. Okay, so like I said, your stop should be probably around 7 to 8 points at the most. Okay, so for rotations, you typically want a 1.25 to 1.5. If you can get a 2.0 risk to reward, that is definitely best. Okay, moving on to a couple more examples here. So we can see how in this example, the previous day closed as a D-shaped profile, and the following day opened up and we continued to rotate inside that balance. So they were maintaining balance even after that profile has closed. So this is how you can use it in your future trading, not just in that same day. So the following day, we are rotating, continuing to range inside of that D-shaped profile, but it begins to break that rotation. It begins to break balance on this little cluster of candles right here. You can see on this current day's profile, we begin to build up a pretty major node on that price level. In this case, it would be around 5,200. Now, when you have a D-shaped trading day and you have those rotations, as we said earlier, we should not be seeing a lot of value above the value area high or below the value area low. So when this candle, or sorry, these candles here began to build that node outside of that value area high of the previous day, that began to break balance, and it's what's known as protecting value. when we are breaking balance, there are two things we always look for. We look for breaking out of the value area and building that node, and then we look for protecting that node. So building value, protecting value. So they built that value by building that node on the volume profile, and they protected it by every single pullback. You can see we started pulling back into that node. Every single pullback was bought up. So as price is pulling down, trying to lose that node, it's being bought back up, and they are using that node as support. So therefore, they are protecting that value. Now, when those two things happen, when we have the value being built outside the value area and that value is being protected, then it is very likely that that balanced day is going to begin to fail. You are going to begin to break balance and look for a more trending market, which we'll talk about in later in this video or in our second video. So then we start to trend out and we start to break out of that D-shape profile. Now, a typical trade for this would be as you start to see that price building up that node and protecting it, you can see price begins to fall below the node, but then it gets bought up again. So as you start to see it get bought up off that node as support, you can take that as a break of balance trade with your stop loss below that node. Typically, you'd want to put your stop loss probably below that previous value level that you were using for that node. So the previous value level in this case would be that value area high right there, which would be basically where the bottoms are here. So you'd want to put your stop below that and then look for a break of balance into those highs. Okay, here is another example of how we were rotating inside of that previous day's value. You can see this retrace back above the value area low begins a new rotation into the value area high. So as we rotated downward, we finished that rotation once we hit that value low. And then once we started to reclaim the current day's value area low, price wanted to go back to that value area high. And then right here, we can see that price was beginning to respect that value area high as support. So as we just talked about, they were building value outside of the value area, using that value high as support. Therefore, they are telling you that they want higher prices. And then you see that breakout. So failed rotations are the first warning sign that the market is looking for new value. Okay, so that is it for the D shape. In our next video, we are going to be covering the P shape profile and the lowercase b shape profile for the imbalances. If you guys enjoyed this video, be sure to subscribe, make sure to like the video, and I'll see you guys in our part 2. Peace, everybody.